Happy 2024. I hope everyone had a great holiday season. Just want to make a quick video to recap some of the highlights in 2023 and talk about strategies that you can take moving forward into 2024. In short, 2023 was a pretty awesome year for the markets. Sound like confetti. The US actually avoided what was maybe the most predicted recession ever, with the S&P 500 ending over 24%. Which puts 2023 more than doubling the almost 100-year stock market average, which is really incredible in spite of the Federal Reserve continuing to hike and increase interest rates throughout the year. But honestly, it's hard to celebrate the S&P 500 in 2023's massive increase when we take a look at the previous year in 2022. Because as JP Morgan puts it, 2023 was really just a reversal of the pain we felt in 2022. 2022, the US market was down 18% compared to being up 24% this year. World or international equities saw almost the exact same thing. And if you're holding a 60-40 portfolio, meaning 60% bonds, 60% stocks, 40% bonds, you saw, which a lot of my clients do hold, you're seeing a really similar thing. We were down big time in 2022 and just to come back in 2023. But I think it's important that we acknowledge just how bad 2022 was. One of my favorite bloggers, Ben Carlson, writes 2022 was one of the worst years ever for the market. And it actually was, since 1929, the 7th worst US market in history. And I think actually the most painful aspect of it was in the 40-year history of the Aggregate bond index, 2022 was the worst by far at negative 13% compared to some of the other worst years. So 2022, 7th worst year in stock market history and potentially the worst in the bond market. So for many of my clients holding a great diversified portfolio, there was nowhere to hide. And one of the things I am honestly so proud of as a financial planner and proud of my clients for is that not one of my clients withdrew money from their portfolios due to stock market volatility. And I attribute that major success to our comprehensive planning and making sure that we have appropriate emergency funds. And keeping a strong emergency fund is going to be a huge recommendation as we get into 2024. According to bankrate.com, the average savings rate is paying 0.51% yield. So if you have $10,000 in your emergency fund, we're talking about $51 the bank on average is going to be paying you. That is completely unacceptable in today's environment, as there are many high yield savings accounts paying closer to 5%. I personally use and my clients have access to Betterment with a 4.75% yield. And the big kicker being that it is insured FDIC up to $2 million or $4 million for joint accounts. I'm not here to promote Betterment, but I am here to promote that you are getting a decent yield on your cash and on your emergency fund. Instead of earning $50 per year, you should be earning closer to $500 on that $10,000 in your hypothetical emergency fund. Now, the next thing I want to highlight, which definitely impacts a lot of my clients, is the increase in 401k or 403b plans. The limit used to be $22,500. It is now going up to $23,000. So make sure you log into the 401k and set your contributions accordingly. And if you turn age 50 this year or older, you can do up to $30,500 of employee contributions to that 401k. The next is always a fan favorite, the Roth IRA, increasing from $6,500 to $7,000. And if you're 50 or older, you can put a bonus $1,000 in there. Now, this is probably the sneakiest of them all. The HSA has increased to $4,100 for individuals and $8,300 for family plans. So if you have a high deductible healthcare plan and you have access to the HSA, I would highly consider, or give me a call here, schedule an appointment to talk about whether it makes sense for you to start maxing out that HSA and maybe even investing those dollars long term and treating your HSA almost like a secondary 401k. Now, the last thing I want to leave you here with is some words of encouragement. I'm sure you're going to see some type of catastrophe or some type of news article, especially as we get into the political season, claiming that the world is going to end, the stock market's going to crash, sell everything and run. Whether it's a yield curve inversion, politics, Russia invading Ukraine, there is always a catastrophe going on. And humans continue to survive and thrive, and the stock market continues to increase along with our standard of living. And even if we have some type of drawdown or dip in the market, that's completely normal. This chart dating back to 1928 shows the blue line where the S&P 500 finished for the year and the red line where it was at some point throughout the year. So you can see that it has been a bumpy roller coaster, and even some of the best years, the market was down at one point. So in 2024, let's stick to our plan so that we can enjoy the things that actually matter. And for me, on a personal note, it is going to be taking care of my new baby girl, Skylar, and Overweg. Thanks for watching, and cheers to 2024.